Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up for this Friday, and we are now on April 17th, 2020. Well, what a week this is. We've gone from the COVID destroying everything to the other side of the hump. So if you look at the U.S., we haven't peaked yet, but if you look at what the financial world's looking at, we had this terrible peak, and now the market is looking down that tunnel like this going, I see some light. And that's because the world, it's not just the United States, the world is discussing, be it Italy, Spain, wherever it's at, how do they come out of this malaise and when can things start to be reopened? The word is start. Nobody's going to throw a switch and everything that you have reopens right away. If you think that, wonderful. It's just not how it's going to work. There's going to be graduated steps. In the U.S., we said it's a minimum of 6 weeks. What do I mean by that? 3 phases that the government, at least the federal government, has come up, and what the states want to do, I don't know. I don't know that they have to follow what the government's stating. But the president did say there's a beginning phase, a middle, and an ending phase when things are getting back to normal. The world will not be the same initially. Are you going into a bar standing shoulder to shoulder? You may, but most people aren't. Restaurants, there's going to be distances. Once we get to the point, and I think you know that, of a treatment and then a vaccine, the world goes right back to where it was. The flu doesn't stop people from going into bars, going to nightclubs, life going on. COVID has. That's the difference. So, what we looked at this week was that. What we're looking at are more government programs coming out. What we're looking at is money is hitting everything. Today, the president announced for the farmers another $19 billion. And now there's talk, what do we do now that the small business program has run out of cash? Is there going to be more? Now, at the end of the day, all this is going to come home to roost. You can't keep printing this money and just say, well, we don't owe anything. The states have lost income galore. I live in a state that's just a terrible mess financially in Illinois, and they just announced, well, we just got another budget deficit. We're adding another $2.6 billion. I hear the ka-ching, taxes, taxes, taxes. Well, that's going to hurt everybody that does something. So let's take a look, if we could, at this first chart. This is a monthly chart, not a daily chart of the S&P. I happen to leave my cursor on there by accident, but don't worry about that. 32.31 down to 25.20, and we're getting a bounce. A bounce is a bounce. It's not a change of trend. The resistance in the market here on the weekly chart's the 18-week at 30.30, and on the monthly, it's in this 28.97 level. When the markets first hit that, that's like a wall. It's normally like if you have a kid and he took out the tractor outside and he knocked down the fence in your yard. Well, when you knock it down, you call up somebody to come up because it's supposed to be resistance, right? So they put it back up and it acts that way. So the first time you hit it, normally, the word is normally, it acts as on the way back up, resistance, on the way down as support. Can it go right through it? It certainly can, but most times it'll stall there. This is called, on the weekly chart, Fibonacci counts, named after an Italian mathematician who came up with the idea that when you get moves, you get bounces against that move in a certain mathematical progression. This is a 38% retracement, and the market absolutely stalled there at first. You played with that, as you can see. Getting the 50% is a bit harder in a real bear market. When you get to 62%, you got to be a little careful that maybe what you're dealing with isn't as bearish as you think. The true Fibonacci people will say that's all you did, but my experience is a little different. And I'm looking at that market saying, okay, we had a 50% retracement. When I look at the overall charts, the pattern on a chart is the simple thing. I'm looking at a pattern that's got, with the arrows, lower highs, lower lows. Until you take out 31, 37, the definition of a downtrend is lower high, lower low. What about moving averages? Remember, moving averages are past. They're not forward-looking, they're a past indicator. Well, the 200-day average is normally a very important number, and while we slid under it, it kept coming back and fought a battle. Now that has said we got too cheap. So we're coming up to the 100-day average. But the pattern is still bearish, and this is a resistance number at this point. And this market, admittedly, is climbing a wall of resistance back up, but it has not turned bullish, not on the longer-term charts. When I come over to Bollinger Bands, see the black dashed lines? It's an algorithm designed to keep the market trading within it 95% of the time. I came up with my own little schemes, and you do that when you've done this 50 years. And I learned how to count, and I said, each time this market steps out of it, I know it's going to pull back in it, but is there a way for me to get a better probability when it's going to pull back in it? That's the first thing. And will the pullback be big or small? Well, in this particular one, it was like a rubber band. You pulled on it because of this whole vertical decline. So to get a big rally back, no surprise if you get these vertical moves in it instead of laying down sideways with tighter ranges. I think you'd agree this is a wild volatility market, and that's what you're getting, these bigger ranges. So in a nutshell on these charts, another level of resistance here, and another one up at the 18-week. You'd have to get over 31.37 to negate this bearish pattern. Momentum. I look at the slow stochastic study on the weekly chart. But unlike the daily, I don't look to see if it gets overbought or oversold. I learned a long time ago, just go with the idea on the weekly chart, the longer term charts. Is the momentum up? Is it down? Is it sideways? In this case, it's up. So I have momentum pointing up, which goes hand in hand with the bounce. I'm in a resistance zone in this market, and you'd have to take out 31.37 for the market to say I'm out of the downtrend. I still think this is a bounce in an overall bearish market. The market that's got me more concerned if I'm a bear is the NASDAQ. It still has the lower highs, lower lows, but you've had over a 62% retracement. So this market's going to make it more difficult to get down here. What's been leading this market to the upside this week has been the FANG stocks, which are part of this as well. We'll see how they do. This is the first settlement back over the 18-week average since the market cracked right back here at the end of February. And remember, the top was just made like that, and the president brings it up. He goes, 6 weeks ago, we were at all-time highs in the stock market, and how right he is, and the market fell out of bed. Now the question is it going to negate the downtrend by getting over 902.50 and call this nothing more than a bounce? This week could be an important week that we know. In the Dow, all you've done is come back to the 200-week average. So I realize people are going to say, oh, why didn't you buy the market down there? Let me make something clear. That's what I've been saying on Bloomberg, Fox, and everything. As we were falling, that's exactly what I was saying. If you have a stock portfolio, what you want to do on events like this, and I've seen them in my lifetime, if you have a longer horizon, you buy companies you like, a little bit here, a little bit there. Futures are a different creature. The leverage is totally different. In the stock market, the most you can get is 50% leverage. In futures, you typically start out with 90% leverage, just the way that it works. So the swings are much, much bigger. Understand that. I want you to please understand that. And I'm looking at resistance from this point between the 100 and the 18-week. I just see this as a bounce so far. I will admit, I got to go back to the drawing table if you take out the swing line high. This is typically not the best sell zone, but it will have proved to be a sell zone if the market takes out this week's low. So if you do that this week, you know what stalled the market. Otherwise, maybe you head up to the other numbers. The Russell's the weakest looking of everything. It just can't get itself going no matter what it does. It's had a feeble bounce, maybe a 38% retracement on the Fibonacci. You did set up the pattern of higher lows, higher highs. You had a whole series, about 4 or 5 weeks that you were trying to stay under this Bollinger Band. That's about as much as you stretch it out, and you popped back. Go and count. Look under Bollinger Bands or over them. How many weeks or days do you settle consecutively over it? You're going to be very surprised. In the VIX cash, we're in a correction. You got way up, got up to the 85 level, and you've halved that, more than halved it. You finished out this week at 38.15. If the market wants, it can pull back in here. You still have momentum down, but it's still bullish. You still have the pattern. It's a flip-flop of the stocks, of the higher lows, higher highs. So I'm looking to see where the support is, and I see it around the 30.13 level. 10-year notes, well, if we take a look, higher lows, but now lower highs. Suddenly the market has gone into a stall. It did that last week. It tried to stick itself up today. Is there anything here that can turn the chart bearish? No. Why? Even if you were to take out 137.16 on the weekly chart, you'd have to close back under the 18-week average to have lower highs, lower lows, and downside bias. So you can stall the uptrend. That I can argue with. Are you stopping it? No. And you're back into that all-time high area. You're what, at 0.64 in the 10 years? So something like that. Got to keep your eye on it. Last in the dollar index. If the dollar index were to finish up the week under 98.40, it turns bearish. You would have then lower highs, lower lows under the 18-week average. Momentum's already down. Who's controlling the market now? That has gone into a pause. You've got the higher lows, but I can argue you have the lower highs as well. So for the bulls to regain the momentum here, they need to take out 101.03. If you take out 98.39.5 and close under 98.40, the bears grab control of the market. Very volatile, very hard to trade right now. I like to wake you up in the morning, or when you get up in the morning, either way, and give you ideas on actual trades that I think should be put on. It's a subscriber video. It's different than this free one. I'm not in it at that hour. You wouldn't want to see me at that hour of the day anyways, because I start recording between 5:30 and 5:45 typically. But I'll have my coffee, and I swear to you, I have my coffee cup next to me, and I sit down. I don't need headsets. I have a whole studio here. And I'm going to record 40 charts. And I'm going to bring you up to date on what's going on in Asia, what I'm seeing in Europe, what reports the U.S. are going to have, because that's the fundamentals. Then we're going to go to the technical analysis with entry, exit, very specific trade ideas. Some will be for swing trades in and out during the day. Others are for holding on in the market. I cover this whole array of markets. Now, you may not want to hear all this. That's fine. There's a slide bar at the bottom on our website for the subscriber. As he does it, he'll light up stock indices. He'll tell you right the section you're in, let go. That's the section he'll play. The videos are about 20 minutes long, each one. A lot of work goes into them, and I think you'll find that it might be right up the alley. Let's face it, we're all stuck home right now. It's another form of entertainment, right? If you're watching this, you might want to look at that. I do the same thing in the Spider ETF video, but I put those out after the markets close at about 4 to 4:30 in the afternoon for the Spider ETF. Same type of subscription video. The introductory price on the futures one, $7.95. Give it a try. You go to our website, under the word research, it explains everything. Give it a try. You can stop anytime you'd want. I'm Ira Epstein. I appreciate you watching. You have a great weekend, and I'll see everybody come Monday.